think, if you look at the Fed for the last year, it's been basically in a straitjacket of creating new money flows and basically uh, monetizing all the assets base and trying to create inflation in order to devalue the currency. And I think they will sooner or later succeed on that. And that's going to mean the gold market's going to move significantly higher.
Fitch sees 1850 this year, but you obviously think prices will go higher. Whereabouts do you see the price of gold going?
I think if you look at the last few times we had the Fed bailing out the economies, like in 2000 or 2008, you start seeing that actually gold always had a big move. In 2000, it moved from 250 to about $900, and 2008, it moved from 600 to 1800. So if you think your base today has been around 1050, you could actually easily see about $3,500.
When would you see $3,500 then?
I think we could see that within the next 18 months quite easily.
All right. Longer term, how long will we sit at 3,500? Are we talking about just until the pandemic dies down or longer term?
I don't think the pandemic has really anything to do with that issue. It's been just clearly indicating that the wealth generation in the system has not really been there already for some time. And it can only be right now replaced with fiscal spending by governments. And as long as that continues, I think the trend will go up and up and up. And I think we're going to be here probably for another 10 years with gold prices rising significantly higher.
What's the best way to own gold? Physical gold or gold stocks or gold ETFs, do you think?
I think if you really want to have a tail risk management, which is not attached to financial systems, the first thing to own is certainly physical gold outside the banking system. And the second thing is the gold miners, which are probably the next area of investments, which will be attracted by major people due to the fact that they can't invest any different, but as well due to the fact that it's probably the only sector which has really explosion in earnings power. And this explosion of earnings power we've seen already last quarter, and I think this quarter will be even better as the average gold prices achieved by the miners is moving up and up and up.
Gold miners, where specifically? Do you have a favoured region like Australia, the United States, South Africa?
Look, I think if you ask, people come from the Anglo-Saxon environment, and the only places you should have actually a mine, which is one which is controlled by the Anglo-Saxon financial monopoly we have today. I think there are miners today in other places of the world which are probably as safe and have probably lower valuations. So we don't even mind looking at Russia, which I think is pretty safe place. We like Australia, which certainly has a lot of companies which have incredible free cash flow generation and growth. And I think that's one of the key things people have to look for, growth in the structure. The stocks you have on the list there, all of them have significantly growth, which you showed. The second one here in North America has a bit less growth, but has maybe longer life. So investors will have to look a little bit more in tune what they really want to have. Do they want to have growth or just a sustainable utility performance which benefits from the structure of gold prices?